Hi, Santa Barbara and Montecito. My name is Daniel Zia. I'm the founder and CEO and broker associate for Zia Group here with eXp Realty. And I'm here to deliver on our promise to be your local real estate economist of choice for the South Santa Barbara County area, including the luxury areas of Santa Barbara, Montecito, and Hope Ranch. And this is your September real estate market update. So we go over all of the statistics in the month of August, as well as we recap year-to-date statistics to give you a broader picture of what's going on in our real estate market. So let's just begin. Interest rates remain high. That is an element that continues to put downward pressure on prices from the perspective that buyers have less borrowing power and buying power to be able to purchase the property, and some buyers are out of the market. That said, inventory levels are very, very low still. They're very, very constrained, and that is an upward element on pricing. So you have this kind of supply-demand battle going on right now where you have low supply and buyer demand that's still reasonably high, a little bit hedged on these interest rates, but it's this kind of consistent, kind of level market. In general, prices don't feel like they're going up. They don't feel like they're going down. It's a little bit like gridlock to try to see what the economy is going to do. Now, we don't know if the Fed's going to raise interest rates again this month, but the prediction is they're most likely going to hold steady, but they still may do one more rate increase by the end of the year. The long and the short of it is we're still expecting a pretty steady, stable market going in for kind of months at a time until interest rates really start dropping dramatically, and that gives kind of extra fuel to the fire. We expect to see this similar market. Now, there's lots of cash in our real estate market. In fact, there were about 43% cash offers last month, a little bit below the record high of the month of July where there were 49% cash offers. But when compared to the average kind of 38 to 42% cash offers that we typically see, we're still seeing a greater percentage of cash offers than we typically see, which makes a lot of sense since interest rates are so high. If the interest rates are in the sevens, low to mid sevens, buyers, they're considering whether or not to pay cash or to secure financing. Well, they've got to be an investment that's getting over a 7.5% return for them not to pull their money out of that investment and to put it into a property, given the nature of kind of opportunity cost of return there. So market overall is very consistent there. Inventory is hovering around 2 months of inventory in the affordable market or the market as a whole. When you look at the luxury market, it's around 5 months of inventory. Both of those are a little tighter this last month compared to the month before, which means the market's kind of from that at least metric point has firmed up a little bit. When looking at this August versus last August, though, we are seeing a decrease in sales activity. So a lower number of sales, and those sales taking a little bit longer to sell this August compared to last August. Now, as far as the number of sales, we're still seeing that 2023 is one of the lowest sales years that we have seen. Right now, it's completely on par to 2009, which was our lowest sales year. I mean, literally, we're talking about so far there's been like 505, 506 sales year to date, and that's about the exact same metric in 2009, which was our lowest sales year following 2008. So we're about half the number of sales as just a couple of years ago, which was our peak sales year of the last probably 20 or so. And so that's kind of where we're hovering in kind of our current market. There's lots of sales activity actually right now in that $2 to $3 million price range. To put that in context, there are about 17 sales last month alone in that $2 to $3 million kind of segment. And generally, that segment of the market's moving quickly. Most of those properties are selling in 2 to 3 weeks versus the market average right now, which is about 4 to 5 weeks. If you're talking about the luxury market, that's going to be a little higher, often more like 5 to 6 weeks. In general, buyers do have fewer selection right now. We talked about that a little bit at the beginning of this video, where inventory remains tight. There's a lot of homeowners that just don't want to sell, or they don't want to sell at 2 3/4% interest rate that they have on their current house to trade over into 7.25% on their replacement purchase. So that constrained inventory means the buyers right now have about 20% fewer options than they did this time last year. Now, the luxury market in particular is actually seeing really great sales activity. Last month alone, there were 10 sales over $5 million. There's actually some more optimism and confidence in the luxury market, so we're still seeing great activity and strength overall. It does take a little longer in general to sell luxury properties, so those are averaging more like 6 weeks than that 4 to 5 month metric that's the market as a whole. And we're seeing about a 7% discount off of the asking price compared to the final sales price for those luxury homes. There were 59 homes currently available when I pulled the stats, homes and condos available in that luxury kind of price point. And on average, they've been on the market for, I think, 3.5 months or so. So to put that into context, from last year in August, there were 42 active listings. So we're talking about there's a lot more options for buyers now, and that's one of the metrics why we've seen that absorption rate over the last year start to climb, specifically in the luxury market there. The highest sales price last month for a home was actually at 256 Las Entradas Drive, which is in the coveted neighborhood of Ennisbrook. Frankly, I was kind of surprised at that sales price. That's a big number for Ennisbrook to begin with, and that's never been one of my favorite properties in Ennisbrook. It sits a little bit lower in the neighborhood. You've got freeway buzz and some road noise down below. It's a big house and it has a pool and it's nicely remodeled. But frankly, I think that was a big win for the seller. That was a big number that I was surprised at. On the condo side, our team actually helped sell the highest priced condo last month at 105 West De La Guerra. That was a beautiful renovated luxury penthouse downtown that closed out at $3.6 million. Continuing on in the condo market, when you just look at the condo market as a whole, especially in the affordable market, on average, they're selling for about a 2% discount based on the current on the last asking price. And they're selling generally very quickly in like 2 to 3 weeks time, generally a week or two quicker than their single family home counterparts. New inventory on the condo side is also down about 27% this year versus last year, and sales activity is down a little bit more than that, about 29%, but still very similar. The basic rule in the market as a whole is when you have fewer homes to sell, even though you still have the buyers, it just means that you're going to see that sales activity down. So we're not concerned that the sky is falling when the real estate market is concerned. We just need more sellers to choose to sell their homes. We've got lots of ready and willing buyers just waiting for that right property to come on the market, and they're even willing to buy with interest rates being high in the market and the economy still being a little bit uncertainty. So as far as home prices, that's usually the big one. Like I mentioned, it seems like it's pretty level. On the condo side, it depends on what segment of the market you look at and whether or not you're including the luxury areas of Hope Ranch and some of those kind of luxury condos. And Montecito, there isn't any luxury condos in Hope Ranch. There's some outside of it. But those have generally either gone up by about 1% or have gone down 4 to 5%. So again, it feels kind of flat. Again, the real estate market on the single family home side also feels flat, but if you look at the statistics, it's down year over year between 4 and 7%, again, depending on what segment you're looking at, if you're including Montecito and Hope Ranch or excluding those, and if you're looking at the median sales price or the average sales price. So there you have it. We're expecting more of the same in the coming months. I think this is just the market that we're all kind of settling into until the Fed basically says, hey, the pain is over. We can start lowering interest rates, the economy where we want it, or home sellers just wake up and say, hey, we're going to start selling homes. Let's start moving. We're expecting just kind of more of this gridlocked market, slower, steadier, but still overall slightly in the seller's market versus the buyer's market. If you have any specific questions or you have questions specifically about different niches in the market or how it may affect your real estate goals, please do reach out. We're happy to have a private and confidential conversation with you and put a strategic plan in place to meet your real estate goals of buying a home, selling a home, or investing in real estate. There you have it. Until next time, friends, have a great one.